On better than expected earnings is our story for today. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. Please take time to like and subscribe. And if you're a repeat visitor, welcome. So we want to thank our replica semi-truck for joining us as well. So what we like to do is on a weekly basis, we like to do a review of what happened in the past week and then do a what's going to happen in the next week conversation. As you know, this week we had kind of a roller coaster ride for the stock. They were from 692 all the way up to almost 650 and sort of landed in the middle. We kind of reviewed a number of things that are going to impact what happens with earnings, so therefore we'd like to focus on those items today. So the first thing that I'd like to mention is that, and by the way, thank you to our Patreon supporters. Your support is greatly appreciated. Makes a huge difference. As you can see, we've gotten into providing charts for you, particularly at the high end, and sort of daily updates to assist you in your process of investing and trading with Tesla. And so we want to continue that trend with our comments today. I have to say that I'm reminded of we like to go back through the Indian proverb that says that there were 5 blind men, all of whom were trying to describe what an elephant looked like, and each one was holding a different part and knew exactly what that elephant looked like from there. And as we head into earnings, I would say that we're definitely experiencing that phenomenon in this case. So in particular, what I wanted to, I want to go through sort of 3 areas. The first area is the 2 components of how earnings impact the value of a stock. The second thing I want to go through is a look at sort of different constituencies. So the more money you have, basically the more money you can use to sway what happens with Tesla's stock, good or bad. And then obviously there are those with technique that may have a little money, but the technique allows them to provide superior sort of process that shapes what happens with Tesla stock, future and outcome. So there's a kind of a lot to cover. I have to say that one of the problems I have with my show is that what I call the middle of the bell curve. There's people who are way smarter than me, who know all this stuff, and this is kind of a reminder and a fly swat. And there are other people that are at the beginning of their learning curve for this, so therefore they want sort of more information. And the questions you pose after the show allows us to sort of figure out, did we hit the high, medium, or low end of what the average might be, so we can provide good information but not go way over the head of our viewers. So I also had another thing going on, which is it's one thing to sort of count what the statistics are and figure out what those statistics mean, because the figure out is your opinion, the statistics are what they are, and then kind of go from there. So with that in mind, today I wanted to ride this show based on the statistics that are blatantly available. So as you know, in the last 2 shows we've covered, if you type in Yahoo Finance and then Tesla, you'll get an image with the current price of Tesla stock, along with a whole bunch of other information that you can get on Tesla. There are 2 lines in the middle of that screen that I'd like to focus on. One of them is the options line. So you, in the middle of the page to the right, you'll see it says options. If you click on that, it'll give you a whole list of current prices and where Tesla's options are at currently, and then you can actually go into the future. Another line we have not discussed previously is that there's actually a discussion group or community group that they have that I think is excellent. I've been sort of on and off it for years, and what I've noticed is sometimes you have people that are just being mean, but they're actually folks that are really sharp who present charts or other analytical points that I think are well worth your time to read about and understand and enjoy, and hopefully apply to what you're doing in terms of your investing. So I particularly went through the options after the week was over this morning to sort of get a feel for, well, what are the sort of sophisticated investors on Tesla saying about what's going on? So we could choose, there are some statistics that I use right off the bat to sort of get a quick thumbnail of what's going on, or a dashboard on the situation. The first one is at the 00s and 50s, how is the pricing looking? How many calls versus puts are they? Are there a huge number of calls, huge number of puts? You know, kind of what's going on with this. So if you look, you'll notice that there are 7,000-ish 750 calls for this week. There are 6,200 700 calls for this week. And when we go up to 800 calls, there are 15,000 of them. So what this kind of tells us is that, you know, for a lot of the market makers who've sold calls, they really don't want the stock price to cross over the 800 number for the week. And on the other hand, there are a lot of people who bought those call options that really wanted to do so. So this is the first bogey that we kind of look at to sort of get a feel for what's going on. I don't feel like it says definitively this will happen. If you'll recall, 2 weeks ago, the 800 calls were at 43,000. So when we're at 43,000 calls, the market makers will use every ounce of weight they have to keep that stock below 800 on the close on Friday, and they pulled it off in spades. I believe, you know, the stock ended up in the 730s or 40s. In fact, the 750 calls also ended up expiring worthless. So I feel like when we're looking at these numbers and we see sort of tepid statistics there, a lot of people are saying, hey, there's a decent chance that with good earnings, Tesla could easily cross 800. So we're not going to mess with it. We're going to wait for better opportunities where stock price is being controlled for us to put ourselves out there. And so when I look at it, and you're looking at 7,000 calls at 750 and 6,500 of them at 700, clearly a lot of people are saying, hey, it's definitely going to 700, and the fact that it's 729 confirms that. At 750, again, we're at about 7,000 calls. It says, yeah, it's a no-brainer. It's going over 750. And we get to 15,000 at 800, they're like, hey, it may go over 800, but there's a high likelihood that it won't. And we're pretty confident about that. The other notes that I should make about each of those price points is that if you look on the put side, you know, we're talking 1,000 puts against 15,000 calls. Those kind of huge ratios also in my mind suggest that the market makers are saying we're not buying puts against this because we think we're going to lose a lot of money if we do. So therefore, it's not worth that. Calls are a better way to go. And frankly, you could sell calls or puts. So folks haven't been selling a lot of puts. There hasn't been a lot of demand for them. And I really think that this suggests that there's a lot of market confidence that we're on an upward trajectory, but the hope is that the trajectory kind of stalls in the between above 750 but below 800 territory by the end of next week. So that's my read of the statistics that are there. We actually have some dedicated students like our friend Carlo that has really gone into diving into what do these numbers look like, both put and call side, and charting that, and I highly encourage you to consider doing that as well. So so the first phase I'm ending where we're sort of looking at what are the options saying about what's going to happen with the stock price, and I think that's what they're saying. The next section that I'd like to get into is, well, what can we expect from Tesla to deliver in terms of numbers, and how do those numbers impact the stock price? So one of the things I like to review at this time of year is the fact that there are kind of two ways that a stock is rated. Number one is what's the revenue number look like? So that tells investors, if we take now and go backwards, sort of how do all those the statistics of performance that Tesla offers tell us about what happened in sort of the previous 8 weeks? And the answer that's come up is we saw the 185,000 vehicles produced and delivered. Even that number was kind of weird because you think about it, if you went around to lots around the world, even after sales were over, there were still cars that were missed because the paperwork wasn't done for the sale, or it arrived after, you know, there are different reasons why inventory would be sitting there. But basically right now, Tesla's saying they're very light on inventory and everything being produced is being sold fairly quickly. So I think those are sort of good signs for the company. The flip side of that would be, what if you had a ton of inventory? Yeah, you sold a lot of cars, but there are a lot of cars sitting around unsold. Might suggest that most of the market demand had been sopped up, which obviously is not the case currently. So after we get through phase one and say, hey, things look good to go. In fact, they look 5,000 cars better than expected in the form of the 85,000 versus maybe 180 that was kind of forecasted. So the next question that comes up that really decides what's going to happen with the stock is, how does the future look? Now, the easiest way to assess this would be, what's your backlog? Elon tells us the backlog. We know how many cars have been pre-ordered into the next quarter, and we're rolling. He's not going to do that, so now we're in the position of going, oh, okay, well, if you're not going to tell us the backlog, we now have to go back and carefully ask interesting questions designed to unearth what the direction of the company might be, and therefore we can sort of infer what's going to go on. Now, China is buzzing. They were short on cars, and only in Q2 are they able to now start providing vehicles to people who wanted to get on the mailing list in end of this December, beginning of January timeframe. Tesla has built a facility there now that looks like it's heading towards 1 million cars a year production capability out of Shanghai, complete with a rail line, all kinds of freeway roadways in and out, etc. One of the hardest parts of looking over the factory in Shanghai has been, well, wait a second, how do you tell whether or not, so one of Elon's goals is 100% sourcing of manufactured components and vehicles from one facility and have it being domestically produced. So you kind of have a situation where you maybe have some of what you see going on at a gigafactory in Reno. So the question mark is, are all those buildings simply large enough spaces that represent a large amount of cars that can be produced? Which the answer is no, and therefore we're looking at built facilities for suppliers to be able to manufacture their parts of sort of Tesla vehicles, but they're manufacturing those parts within a Tesla facility, so the time to the manufacturing line can be shortened. And so I have to say I've been very surprised at how big the facility has gotten in Shanghai, but how few cars are coming out of it, which highlights the point of them building a lot more than just the cars at those facilities. But what's implied there is they're capable of easily meeting the 500,000 vehicles that are being produced in Fremont this year. But the suggestion, based on demand and rules that the Chinese have made to force an increase in EV usage, is that Tesla should be able to produce between 500 and 750,000 vehicles from Shanghai this year, pushing the total for this year over 1 million vehicles sold or produced, possibly sold by Tesla. So I'm getting into this in terms of those general numbers because we're going to get hints of how Shanghai is doing, what kind of daily, weekly runs they're doing, and how we can build those numbers into understanding what the future might look like. Then we have this issue of what's going to happen in both Austin, Texas, as well as what happens at the end of the year as we finish up in our production activities and start sort of the next stage. The answer that's come up is Elon is saying he's going to start by doing Model Ys before doing the Cybertrucks, because evidently there's so much demand that they don't have enough vehicles. And then in theory, at the beginning of 22 is when we start seeing the production that might come in Germany. So where we are now is that half of the business looks solid. There's no suggestion that they aren't going to sell the vehicles that are being produced around the world. And for us, one of the signs of China slowing down in terms of demand for both Model 3 and Model Y would be vehicles starting to be exported into Europe from China. And there's no hint of that currently. So for us, what that means is, they still have robust demand in China. And by the way, even if they have some negative press that's gone on, obviously you've heard about the Chinese protester jumping up and down on a car and claiming that it had no brakes. And at the same time, she refused to let the car be independently analyzed to determine why the brakes weren't performing as expected. Elon made a point of releasing all the data on the vehicle so that everyone could look through it, and I thought that was an important move, because clearly you want to make sure there are no major issues that the company has that are not being addressed relative to customers. And I just think that it was a smart move on his part, and we'll see if that causes a slowdown at all in sort of demand and delivery for Chinese customers and a very important market. I would say that if the car had an accident and the person was speeding, I think that the company's in the right in that circumstance. So where are we now, getting back to our stock discussion of the future? Well, the future actually looks really good in terms of finishing up new facilities, etc. It looks pretty good. One of the issues that I raised that I think is going to be a problem is how many different facilities does Tesla have under construction that are generating costs but not generating revenue? And so I think that this potentially introduces the possibility of us having a lighter than expected earnings number to go with a better than expected revenue number. So I think that if we come in line or above analysts' earnings expectations, I think we get a nice pop in the stock as a result. So once we get through these two phases, there's another variable that's affecting not only Tesla, but a large number of companies right now, and I think it's worth sort of review, and that is, the way you determine the price of a stock is you multiply its growth rate times its earnings, and that tells you the stock price. So in Tesla's case, they have a very high growth rate, and they do have earnings. When there aren't a lot of earnings, but there's a lot of revenue, because most of the companies growing hyper fast are consuming a lot of cash in reinvesting in their growth, you also have multipliers on their revenue growth as a way to determine if the company is solid. So what we're seeing currently that is a problem for Tesla and a number of big growth companies is that there's something going on right now where there's a question mark as to what percentage of your sales are you being given credit for in your stock price. So in this case, what we've noticed is if you look at a number of companies, it could be Tesla, but it's also, I watch, you could call it Shopify, Amazon, more like PayPal, Roku. In the case of Roku, very interesting company. It's done very well during COVID. It has a certain growth rate of revenue and profit that's been happening, and they've gotten nice upgrades, but the stock was down like 40 points this week. So the issue is that in the case of Roku, which is, I'm choosing to focus on Roku because during a pandemic, you can't go out and buy a car, but you can actually watch a show on Roku, and there's advertising revenue and other things generated. So they and people like PayPal and Square, all these entities have been doing well during the pandemic. And even if we go into lockdowns in certain places, they're still doing well. So one of the issues that's popped up is, well, wait a second, there are issues related to inflation and how does inflation impact things. In theory, I guess you could say consumers may watch less or pay less, because they have cash going to buy more, for example, fuel if prices are up. They don't go to restaurants. They might buy the food and cook it themselves versus going out to a restaurant to conserve cash. Well, one of the things that's been happening with Tesla is we have a situation where, almost every other day it's being announced that there's a $500 increase or a decrease, usually an increase in the prices that Tesla is charging for vehicles. Now, I think this makes sense because they have to go out there and buy aluminum for the cars. They have to buy sort of oil-driven production items. So as you know, oil represents 2% of the cost of most companies. So if you have a situation where their base costs are rising, it filters into the car and they have a decision to make. Do we eat those costs, A, or B? Do we hand those costs off to customers and therefore not take retain our profit margin in the process? And then there's another question that comes up is, well, if they hand off those costs, how might that affect their sales? So I could definitely see, instead of Tesla getting its full earnings times growth rate multiplier, there'll be a discount on that multiplier. So the difference between, let's say, a $750 price tag on Tesla and maybe an $850, $900 price tag is once the analysts finish saying, hey, we're going to discount their growth rate and not give them their full credit that they're due, you're all of a sudden in this position where it's like, well, wait a second, Tesla at a similar number of cars sold at a similar growth rate, et cetera, in fact, an accelerated growth rate other than expected, they deserve a price tag that looks like 900 or 1,000. So I made the suggestion today that, hey, Tesla's going up $100 after earnings, and this is sort of where I get into that. The wild card in this whole thing, which I think represents $100 in value to the shares of Tesla, is the fact that it seems insignificant, but Apple just spent $50 million to have Tesla set up a solar facility to provide power to their data centers. Well, particularly if you look around DC and some other places right now, there are huge numbers of data centers being built, and Apple is sucking down power in that regard, because think about it, if you have an iPhone and you have backups to a data center, all that electricity it takes to execute that data transfer is what it's all about. So this business has been suggested that it's going to generate $10 billion in 2 or 3 years for Tesla on an annual basis. And so if you have that amount of business and you have an increasing stream of revenue, you have to do a multiplier on how much business is there, how fast it's growing, and now you sort of tack that on to the value of the shares. So I believe why there's a $100 bump in Tesla's stock price is that Elon answers the question as to how's this business doing. This is kind of big because the house solar business has been slow because the solar panels are kind of expensive, et cetera. So I think that seeing the industrial side of that business start to deliver good numbers is a big deal, and that's why the stock price actually jumped from the early 600s all the way to where it is basically right now. So there's one last variable that will shape what's happening here, and this is how I actually think the week's going to play out. There are sort of two, I want to call them large groups. One group is the hedge funds, or the equivalent of hedge funds, that as soon as they see the number after hours, Tesla's stock price is going to respond. Then what's going to happen is that we're going to enter the 3-day rule, where it's going to take about 3 days for analysts to go through, well, what actually happened, and how do we determine the target price that we're going to have for this stock going forward. And I feel like that answer is going to come out in the following 3 days. So that would be Wednesday or Thursday is where we're going to start seeing either buying or selling by institutions, but I actually think buying. I want to remind you of what happened in the last earnings announcement in the January timeframe from the previous quarter, and that is that Tesla's earnings came in light, stock price fell by 50 points, and then the 3-day rule hit, and all of a sudden the stock price started accelerating nicely afterwards. So I'm reminding you of this because what I see actually happening is the hedge fund guys saying, hey, if the stock stays the same, or it might even dip based on what our priorities are. You guys didn't blow us away. But then the institutions are going to say, hey, I need consistent growth that I can anticipate and that is delivered. And then, so we're happy with numbers that the hedge fund guys do not like. And that's kind of what we saw in the first quarter. So I really think that the profile of Tesla and how its stock price moves post earnings and other major activities has really changed. The big change is what I call the wet blanket. So starting with what happened when the S&P entry occurred and you had 200 million shares trade and no movement in the stock price, we've now entered a realm where there's this phenomenon going on where all of a sudden Tesla will deliver great numbers. We should see a pop based on the process that we were going through the last couple of years. But post S&P, we've entered this zone where you might see a few dollars, 30 to 50 point move on the day of that announcement. But then there's this delay period, and then the money starts getting handed out in the form of increased stock price. So I have to say that I'm really expecting this to be the case. And for that $100 pop I'm talking about, I think that based on the precedent that's been set from the S&P, the last earnings, and now, I don't think we see that 100-point rise for Tesla for another at least 5 business days, if not 2 weeks. And the question is, well, why is that? And the answer I'm coming up with is, if you go back over the last 2 years, notice the week prior to earnings, the number of large firms, that is Goldman Sachs, that's Morgan Stanley, Credit Suisse, there are all these analysts that would present and anticipated where they're placing the company. And they may have done ratings earlier, but they'll reiterate what those earnings might have been. So the question that comes up is, those guys are very powerful, and the question is, well, how come you guys are no longer presenting your theories prior to earnings, and then we get to see your analysis and why you're giving a price target after earnings now? And so, number one, I believe that phenomenon is affecting the stock price clearly. Number two, I really think that where we're at is, I feel like we're starting to make a transition where Tesla is large enough and a sustained position enough where putting out negative reports on the company could affect your future banking business. So you have to be careful about putting out like stock destroying information, because Elon can be punitive and come back and leverage that destructive behavior as a sign your bank gets none of his business as the primary dealer or secondary dealer on Tesla's issues. The other phenomenon, obviously, is it's safer to wait and see the actual numbers before you make a statement. But I also feel like there's this thing going on where I really feel like there's some collusion between the investment managers and the analysts, because those managers actually pay for those analyst reports, and that's how the time and energy it takes to put them together are created. And the collusion, I think, is focused on the fact that, wait a second, why do you want to give out that information to anybody that has not paid for it, in any early stage? So with that in mind, I really feel like what we end up, and this is why we came up with the 3-day rule, I fully expect that the analysts won't hand the information about what they think is going to happen for Tesla out until 3 days later, maybe 4 or 5. And to the general public, while they allow their large institutions to start accumulating shares. So I think what we need to watch for here is, will we see an acceleration in the stock price prior to the analysts announcing their views or their upgrades on the stock? Frankly, it could be a downgrade situation, which I doubt, but possible. That lurks there as well. So in general, I would say I think we're heading into a nice positive space for Tesla relative to its shares and announcements and upgrades when it comes from analysts. But I really think that there's an adjustment going on right now where we're moving from the era of rogue analysts coming out, giving a real high price target for the company, bunch of other analysts coming in, and then we're rolling. That seems to have disappeared, There's no clear reason why. I presented what I thought were the reasons, and we actually see what happens with that. So, in general, I just think that Tesla's entering sort of middle agehood when things move, but maybe a little bit slower than expected. But I think that, again, those of you who've chosen to own the shares versus the options are in a smart position because you can just wait it out until you get paid rather than sort of hoping for that quick pop that we've gotten in the past. And then you can exit onto other things that are moving quickly in terms of their share prices. I would say that one other sort of lurking thing that's not a huge deal, and Tesla's going to make some announcements, is this whole chip shortage. As we shared, it, what a rental car company is, or if you want to rent a building, the problem that's happening is when it comes to semiconductors, there's a theory that you go buy some semiconductors. Negative. The way semiconductor business works is that there are certain people who take risks by putting up these giant fabs. And what they do is they lease space on that fabs in that space to different companies. And so once all those spaces are leased out, there's no more leasing available unless you can buy somebody out of their position on that line. So the disaster that's happening right now is just the fact that there are a lot of auto companies who canceled their space that they had leased on those fab lines. And now COVID is abating so they can start producing. And now they're saying, well, we want to get those spaces back. And in the spot market, people are like, how about double, triple, quadruple what you would have paid had you organized and kept your slots? And so now those companies are saying, well, we can't afford to pay those kind of prices and still make money on the vehicles that are produced from those chips. So those guys are in a tough position. Tesla, on the other hand, did never slow down and did not cancel their leases. So both the lease space and the growth in that lease space seems to be well conceived and executed by Tesla, and therefore they're not having that problem. So I'm bringing this up because one of the lurking issue is, yes, there's going to be competitors. The challenge, though, is if we're a year out from solid access to all the chips they need by competitors is in the offing, there's the possibility that the competition that was planned has to slow its arrival because they just aren't able to open up the plants because there's a shortage of chips, which gives a further reason why Tesla, rides with a competitive advantage in this space. So this is a long-winded statement to say there's a lot of small and large reasons why Tesla does very well, definitely in the short term, and if Elon allows us to see some of that backlog, we think heading into the longer term as well. So will it happen on day one? Based on the options market, it's saying no, it won't. Will it happen over a longer period of time? Absolutely, I believe that's what's going to occur. There are risks, though, obviously, with what happens with inflation, because car prices do have to rise to maintain profit margins if your cost inputs keep rising as they have. And at a certain point, maybe $3 to $5 grand more, you start to affect number of sales. And we're not seeing that totally yet, but this would be one of the reasons why analysts are not choosing to give Tesla its full growth multiplier that it deserves in this circumstance. We're going to find out more about all this in the near term. So I wanted to share all this with you. I appreciate your taking time out to join us today. Don't forget to like and subscribe, and join us on Patreon for daily charts as well as ideas on investing and trading Tesla. And at the higher level, quantity information I think is way better, and it's more frequent in terms of number of days for the week. Next, I want to move over to our health tips. I'd like to encourage you to consider some core training activities, in particular, perhaps 20 to 50 sit-ups a day, and if you can, 10 or 20 push-ups. I'm sort of getting into this regimen with a health professional friend who has a fairly intense regimen that he does. Also wanted to encourage you to consider a 2-5 or any of the other fasting diets. It's recommended that it might be very helpful in your process of mental health as well as physical health. Number 3 is don't go to bed within within 4 hours of eating, minimum 2 to allow the food to digest before you go to bed. Number 4 would be, if you're gonna do lovemaking, a very small meal like a salad would be a good idea. This facilitates blood flow not being concentrated on your stomach and dealing with that meal, and would be available for other activities. We also wanted to suggest that you try our sort of sleep research tactic of maintaining the same sleep schedule to bed and wake, even on weekends for a couple of weeks. And that way you can find a natural circadian rhythm for how to maintain your schedule and therefore your health. At any rate, this is Greg for Teslafaninsight. Best of luck this week. Good luck as we enter earnings tomorrow. Tschüss German, au revoir French, Lehitro Hebrew, Khoda Hafez Farsi, Zdravstvuyte Russian, Ni hao ma Chinese, Konbanwa Japanese, Heido Swedish, good day our friends in Australia, and in Jamaica we say enough respect, walk good man. Thanks for joining us. Have a great day. We look forward to your constructive comments, and also mention if there's interest in SpaceX shares. Have a great day. Bye for now, and we look forward to our coverage of earnings as we head into it on Monday.